Mistakes are a part of life. And guys, I really hate to break it to you, but first-time homebuyers are no exception to this rule. If anything, first-time homebuyers are much more likely to make mistakes because there's so many moving parts that go into a real estate transaction. So what is this video about exactly? Well, this video is designed to equip and prepare you for the potential pitfalls and common mistakes that happen when buying a home for the first time. After all, buying a home is the biggest financial decision many people will make in their lifetime, so yeah, kind of important to know this stuff. For those of you familiar with my channel, welcome back. And for those of you who are tuning in for the first time, my name is Vargas from the Vargas team, and I bring you real estate related videos every single week. So consider subscribing if that is something that you're interested in. So as I mentioned before, the topic of today's video are the common mistakes for first-time home buyers. Now, the original concept was to select 3 or 5 most common mistakes, but I quickly realized when making this list that that wasn't going to be possible because there's so many mistakes I want to talk to you guys about. So I don't know exactly how many we'll end up doing by the end of this video, but I do know that they're all important. The first-time home buyer market is one of the most competitive markets out there. So having the knowledge, the know-how, and a little bit of patience is going to go a long way in your journey of purchasing a home. Okay, that's enough cliche motivation for now. Let's just get on with the mistakes. Mistake number 1, probably the most obvious and the one that you've all heard before, is not getting pre-qualified before you go shopping for real estate. Honestly, I hate the fact that I even have to mention this one because it should go without saying, but many times it doesn't. Let me be brief. You can't shop for real estate until you know what you qualify for. It just doesn't make sense. I mean, you may have an idea of what you qualify for, but you really don't know. So talk with your mortgage lender and get pre-qualified. Nowadays, you can get a same-day pre-qualification. In some cases, it may only take up to 2 days, but either way, it's quick. And it's the best way to know the parameters of what you should be looking for, such as the purchase price, the loan amount, the HOA fee, the property taxes, and much, much more. Since we're on the topic of pre-qualification, mistake number 2 is not getting a DU approval. I made a video where I mentioned how DU approvals go a long way to help your offer stand out, which again is vital if you're in a very competitive market. So check that video out, but after this video. But essentially, a DU approval is an advanced approval. So what you want to make sure you do is your lender provides you this because this is going to give you the best chance down the road to secure a property. Sticking with the whole loan approval theme, mistake number 3 leads us to your closing cost. A lot of home buyers do not take this into account, or they grossly underestimate closing costs. So make sure your lender gives you a breakdown of your costs when you're getting pre-approved, because this is separate from your down payment. You do not want to have any surprises come the time of the closing just to find out that you're short on cash that you need to close in. Yeah, you just don't want to be in that position. Mistake numero 4. Thinking that you need 20% down to purchase a property. I'm not exactly sure where this train of thought began. I guess it has to do with the fact that a lot of condos require 20% down, but I digress. Regardless, there are many loan programs out there is what I'm getting at. And loan programs that exist for much less than 20% down, such as FHA, which will only require 3.5% down. But again, conventional loans also exist that require maybe only 3% down. You can also even get a VA loan, which could be had at the very low cost of 0% down. In any regard, I think you guys get the point. Check with your lender or bank to see what you qualify for, because you may be surprised to see actually how low these down payments could be. Mistake number 5. Not shopping around for different mortgage rates. Look, this one makes a lot of sense on the surface because of course you want to avoid hard inquiries that will affect your credit. But what a lot of borrowers don't know is that when you're shopping for a mortgage, credit reporting agencies will take this into account, and multiple inquiries will be handled as just one inquiry so that you can shop around. This was intended to encourage homeowners to shop around. So of course, take advantage of this. Now, you don't want to go all crazy and go, multiple applications, because then that just becomes time consuming and expensive. But you want to kind of follow that Goldilocks rule where it's not too many, not too little, but just right, so that you can compare these different terms and these different rates, because that will inherently in the long run save you a lot of money. For the most part, those are the biggest mistakes I can think of when it comes to mortgage loans. But now we get into the mistakes that first-time home buyers make after they have a loan approval. And as a real estate agent, I see these mistakes on a day-to-day basis as I'm constantly advising my clients on what to do to avoid them. So yeah, I may be a little biased when it comes to the few that I mentioned, like number 6, for example, not using a buyer's agent to represent you on the transaction, or better yet, using a listing agent to represent you on the transaction. It is not lost on me that many of you are going to be saying, of course, I'm going to say that because I'm a real estate agent. This is sometimes one of the hardest mistakes for me to get through to first-time home buyers. I accept and understand their logic. It's flawed logic, but I understand it nonetheless. Okay, so to begin with, the listing agent is going to have their best interest of their client in mind, which no matter what they tell you is going to be the seller. The person who pays their commission. It's like being represented by the opposing counsel during a lawsuit. Are you going to reach a settlement? Sure. Is there going to be some sort of fine print in the contract that favors the other party more? Possibly. I mean, what do you guys think? Hoping you're going to save money on the commission as a buyer since the listing agent will just waive his or her half of the commission is also flawed logic. It's going to be extremely difficult for you to find any listing agent worth their salt that is going to be willing to do this. And even if they do lower their commission, what if the house was overpriced to begin with? So it's overpriced by 5%, they lower their commission by 2%. Congratulations, you just overpaid by 3%. Are there any agents out there that are going to represent both sides with little to no favoritism and no biasness? Is that even a word? Yes, I'm sure that exists, but it's not as common as you think. By now, you could tell that I'm very passionate about this one because any real estate agent who's been doing this long enough has been affected by this train of thought in one way or another, so I did want to dispel this rumor. Okay, that's enough lamenting for now. Let's move on. Mistake number 7, changing jobs before closing, or pretty much changing anything in relation to your finance during the process of the loan. This means you don't want to use your credit cards and add new debt. You definitely don't want to take out a car loan or a car lease because any changes to your debt to income ratio will have a huge impact on whether you can qualify or close on that loan or not. When your file goes into what is called quality control, the lender will re-verify your credit and do what is called a verification of employment. I have seen a lot of buyers get into trouble and potentially cost them the property if anything changes during their financial picture at this time. So definitely don't change jobs, don't add credit. Basically, what you want to do is keep everything the same from the time that you applied and wait until any big life-changing events, any financial big life-changing events are going to happen after you close because that could jeopardize your closing. Mistake number 8. Not understanding your market. Do you live in a market with high transaction volume? Are homes in your market very hot at this time? What about condos in your market? Speak with your agent about this before you go shopping for real estate. Why? Because you don't want to be that buyer that finds a home of your dreams and then says, let me think about it. Because before you can even think about it, someone just stole that home from under you. If you're in a hot market, then you need to know this. You need to be ready to pull the trigger when the time comes and you find that home. Remember, in the time that you saw today to think about it tomorrow, someone saw it yesterday and thought about it today. So don't be afraid to take that next step. People are only afraid and hesitant in what they don't know. Knowledge gives you power and the confidence to make decisions. So any doubts that you have, you definitely want to go over those with your agent and your lender before seeing any property so that you could be ready and confident to beat out your competition. Mistake number 9. Submitting offers way below asking price. This one goes hand in hand with number 8, but it deserves its own segment nonetheless. Look, this may be a little harsh to take, but the market does not care what you think the property is worth. The market is the market, and a home is worth what someone in that current market is willing to pay for it. And that is based off of the previous sales in that neighborhood. Are you willing to pay the market price for that home? Well, that is a question that only you can answer. But what I can tell you is that if it's a home that you really want, it's likely a home that other people really want. So the question you need to ask yourself is that home worth losing, trying to negotiate for less than market value? I say all of that to say this: a home that you really like may be worth sending an offer to in comparison to what the market value for that home is, and not an offer below market value because that's what you think it is, because that may insult the seller and start ruining the deal before it even begins. Can you negotiate and get a good deal under market value? Yeah, those still exist, but it depends on your market. So you need to understand your market first and then base your offers from there. And just a reminder, a few $1,000s in an offer price over the span of a 30-year mortgage is not going to make that big of a difference in your mortgage payments. Mistake number 10, falling in love with the home instead of the neighborhood. This one may be a bit tricky because as buyers, we all want different things out of our home purchase. But looking at this practically, you have to take into account the things that you can and you can't change. What can you change? Well, anything cosmetic, of course. So flooring, kitchen, roofs, bathrooms, the whole nine. But what you can change is the block. What you can change is the neighborhood. What you can change are the things that give it value outside of just the cosmetic changes. From my experience, I can tell you that both of those can affect the home's value, but the latter historically has had a bigger effect in your home's value in the long run as opposed to cosmetic changes. Real estate has always been and will always be location, location, location. So take that into consideration because you may be better off going into an older style home that's in a better neighborhood, as you can always make those cosmetic changes down the road. And as a bonus, mistake number 11, believing the Zillow's estimate or any other real estate website estimate for that matter. As real estate agents, we get this a lot. It always happens that a buyer or even seller will present us with a home valuation for a property based on nothing else other than what they find online. These websites are notoriously incorrect and in many cases are miles off in terms of valuation by a huge margin. The best example of this was Zillow's very own CEO, Spencer Raskoff, who famously sold his home slightly over $1 million, but the Zillow Zestimate from his own website valued it at $1.7 million. That means that he sold his home for 40% less than what his own website estimated it to be. And to make matters even worse, in 2020, he listed his Brentwood Park home for $7 million over the Zillow Zestimate, further cementing what us real estate agents have been saying all along. So when it comes to a more accurate valuation of your home, please ask your real estate professional or your property appraiser, as they will be able to give you a much more accurate estimate, or at least way better than a 40% difference. Are there any more home buyer mistakes? Yes, I'm sure there are a few that I missed, but I think that this video gives you a good starting point as to my opinion what the most costly mistakes could be if not handled correctly. But let me know in the comment section below if I missed anything, or what you think your first time home buying mistakes would be if you had your own list. Guys, consider subscribing to the channel for more weekly real estate content just like this video, and help the channel out by tapping that like button if you found value from the video, and sending this video to somebody else who you think can find value from it as well, to help spread the message. And as always, guys, thank you so much for tuning in, and until next time.